In today's forecast, we'll be looking at the direction of gold, the importance of having alternative counts, and finally look at whether Euro USD has turned bearish or we have one more upside to go. This is Peter Pearl, founder of Pearl Markets, and welcome to Wavematic Weekly Forecast. With gold on the 4-hour time frame, now we are having a very nice wave count. We have wave 1 for purple, wave 1, wave 2, and now wave 3 is underway. Then we get another wave 4, then wave 5. But the most important thing of how we are trading this week is now with purple wave 3, we've seen blue wave 1, blue wave 2, blue wave 3, and now we have this whole correction in play. So that is what we are going to decipher and see what actually the market is doing. It is a very nice and simple pattern, but it has different scenarios. Before even we get to what pattern is happening, looking at our wave counts, because we have wave 1, blue wave 2, and blue wave 3, per the wave principle, blue wave 4 cannot come into the territory of blue wave 1. So this is our invalidation level. No matter what, if this wave count is correct, price shouldn't retrace to enter into this territory before we go. We will not go much details into that. I'll do that on another video, and let's look at the pattern that is happening now and how you can trade it profitably. We have 3 scenarios: a primary count, an alternative, and 2 alternative counts for gold. And the importance of having alternative counts is for nothing to surprise you in the market. You know exactly how the market will play. So if it does not move in your primary alternative count, you know your backup plan. It's like going to a war and having a plan A, plan B, and you can even have a plan C. So if the market does not move as you want, you don't even delay because you know the next way. And what the alternative count also helps is, after you enter a trade, it helps you in managing the trade. It helps you to know your exit points, because if you enter a trade with a primary count and the alternative count is coming into play, you know exactly when to get out from the market and save your profits. Or even if you are in a loss, you know when to get out and minimize your loss. So with gold, with the pattern that we looked at, this is our primary count. Now with our primary count, we are seeing wave A, which is an ABC. It's not an impulse, but an APC. A zigzag for an ABC. Then we are seeing a triangle for wave B. So if that triangle should be in play, we have A, B, C, D. So if it is this triangle that is in play, we expect the market to move up to complete green wave E of yellow wave B before we come down to complete yellow wave C of blue wave 4. Then after that, we will expect an upside. If this pattern is in play, then what is happening is, in a triangle, wave E cannot go beyond wave C. So this is going to be our invalidation point if our primary count is in play. So our invalidation level will be 1993.438. So now we know that you can, if you want to trade this, when you get a buy setup, when you get, let's say, a small flag, you can buy. But that is going to be for a short-term trade. And if you buy, your take profit should be below 1993 and manage the trade, because if this count is in play, there is one more move down. If we look at alternative counts for count 2, we are looking at wave 4, blue wave 4, and this also qualifies for a complete triangle. It does not break any of the rules. For this being wave A, wave B, wave C, wave D, and wave E. Then now we are going upwards for the final wave for blue wave 5. So if this count is in play. Whether count 1 or count 2, we are anticipating a buy. But whether the buy is going to be like the final buy for wave 5, or we are going to have one downward drop for blue wave 4, when you get the buy, you can buy it. But you don't know whether count 2, we don't have much price action, so we don't know whether count 2 is in play or count 1 is in play. So when you buy, you will manage it and look at how price goes. If price come and break through 1993.438, you just discard count 1 and follow the buy. So you'll be in profit. So as price is moving, you keep on moving your stop loss, so that should in case the sell is in play, you'll be taken out from the buy in a little profit and find an opportunity to join the sell for blue wave 4. So with this scenario, with the count 2 scenario, we know that wave E cannot go beyond wave C. So if price should come down to this level and break this low, one, it has invalidated this triangle. At the same time, it has also invalidated the triangle for wave 1, because that one to wave D, it cannot go beyond the end of wave B. So whichever way, if price should get to 1904.41, the wave 1 and wave count 1 and count 2 is invalidated. That is when our final alternative counts get in play. So if price should come down to this level, you discard count 1 and count 2 and move to count 3, which has a different count but also very valid, does not break any of the Elliott wave rules and guidelines. So we are having a zigzag for wave A. Then now we have wave B. So we are anticipating that if this is in play, wave C is in its play. So wave C, we are seeing a double 3. So we have seen a W, and the X gave us an expanding triangle of A, B, C, D, and E. So if this is in play, then price is going to move down to give us a C before we move up. But this is our last count. So before we will switch our bias to this count 3, we will wait and expect the 1904 invalidation level of count 2 to be taken out before we will join the sell. Apart from that, we are bouncing our hope on our count 1. If we get a buy, we are going to buy. But as we are managing the buy, if price takes the invalidation level of 1993.438 of count 1 out, we will hold on with our buy and switch our buyers to count 2. I hope this helps. And having different scenarios, it helps you in mastering your wave counts. It helps you and nothing surprises you again. So you can be at peace and enter trades and let it run. Because if you don't know what the market is doing, that is where you get in the trade and always be interfering with your entries. You'll be interfering with you get out of the market too early. And when the market is even retracing, you are afraid, and it always gets you emotional. But understanding the wave principle and putting it in use helps you to manage your emotions very well. At the same time, also manage your trades. The final thing we'll be looking at is Euro USD. With Euro USD, we have also two scenarios. So this is our first count for purple wave 1. Now we've seen that after green wave 3, we had a correction, which a wave 4 correction, which ended up to be a triangle, and A, B, C, D, and E. So if the triangle was correct, then this qualifies to be a wave 5, a very short wave 5. And now what is happening is we've had wave 1. This can also be a wave A if it is a short correction that is happening. But now we are looking forward to a deeper correction if this count is in play. So we have wave 1. Then we are having an A, B. We are expecting price to move a little higher to give us a C into the 38.2 to 50 fib zone. Then we will continue to wave 3 or wave C. So if this count is in play, that is how we expect price to move, that we get a little upwards, then we will look for sell, then we come down. Our alternative, so this is how we are going to trade it this week. When price gets into this zone, look for any reversal sign based on your strategy that you are using. Any reversal sign that you get for a sell signal, you can join the sell, because this is an impulse. This looks more of a correction. It looks more of a correction, so it shows that price is going to continue downwards. The trend is going to continue in the direction of it. We also have an alternative count for Euro USD. With this alternative count, we are seeing that this being a wave 1, we have wave 2. With wave 3, we are seeing a 1, 2, 3, 4, 5 for wave 3. Then with this count, we are looking at wave 4 not completing, so we are looking at an A, B, C for an expanding flat. It can and find support at the channel support and move upwards, or it can break the channel. But when it breaks the channel, you have to be very careful, because the previous wave 4 of yellow wave 4 can hold as support. So even if it breaks the channel, don't just sell it like it has broken the channel. Wait, maybe it will find support at the previous wave 4 and price will still move up. So whichever way that you are trading it, whether the first count or the second count, when you get a sell, you sell it for our primary count that we used. But when it's coming down, you know that this scenario is also possible. So if you get a sell here, you should sell. But when it is getting to this level, you have to manage your trade well, bring your stop loss to entry and see whether price will break through it, or we will see reversal signs here. Thank you very much, and this is where we are going to end. If you have any questions or any charts you want me to analyze in the course of the week, let me know in the comment section, and do well to subscribe to our channel, and we will see you in the course of the week.